Now we're live again.
And Noah, I think we are back here. Obviously, we're going to end up splicing these things together. Go ahead and kick that disclaimer. Part two,
Oh
part
yeah,
deux.
part two disclaimer. All right, there
Yeah.
you go. Okay.
Rock and roll. Yeah. Now, here's the thing, guys. We're talking about markets, and I want to get to individual companies. If you are coming back into our show, welcome. I'm assuming we are back on take two here. I do see that it is launching and live, and I think I'm the first one in. So first, and there's Daniel. So we are back, and some people will come back and join us. Here, crude oil, obviously very bearish, coming down. There's obviously a lot of pressure on crude oil. The supply problem, the demand problem, but there's this belief, Mark, that eventually, whether it's 6 months, 12 months, or down the road, we're going to see higher oil from here. Correct? I mean, that's the simple version of the premise.
No, I mean, and it's pretty universal thought. So if I'm wrong, if Gina wrong, Goldman Sachs wrong, Bank of America wrong, everybody's wrong. It's just you're going to see a transformation of the U.S. oil and gas industry after you're all done here. I mean, something has to give at some point.
Yeah.
The capacity issue alone is what might send it lower sooner than later and might prompt mass production cuts, because building capacity is not an overnight thing. It's not an overweek thing. It's not something you can just do in the short term. And you can't just infinitely build capacity, right? You're all right, so we're going to build more storage, and then what, you're just going to keep doing that infinitely? No, there's a breaking point that oil production is about to hit. And they're just going to have to start pumping less on insane levels, especially as Saudi keeps up the pressure in their oil price war. And
yeah.
It's just that simple.
Sure. No, and obviously the short-term volatility is there, the bearish pressure is there. Gold, I want to take a look at next and talk a little bit about the metals market. You're getting a little bit of a divergence between gold and silver here for many different reasons. Mark, I'm sure you talked about it in the commodity reports. Gold fundamentally as a reserve currency, as a hedge, as a safe haven, it's a different demand for this product than, say, silver in the short term at least. Gold up here on a triple top. Noah, breakout tradable, yes, up above 1704.
Oh, absolutely. Breakout above 1704 would be a very clear signal. A close above 1704, even better. And again, with the way it's kind of popped up and tested that level and pulled back down into a consolidation, you're really watching for the formation of a cup and handle type pattern on that. That's, one of the reasons we like that pattern is because it launches from a higher base point. You get that little base, and then you've got plenty of room for it to run once it clears that, because you got a lot of clear air out above that 1704.
But take a look at silver here, Noah. It looks like a bear pivot to me, and I'm very concerned about the short-term volatility of silver. Tell me what you've seen in this chart.
Oh, it definitely looks like a bear pivot. It's got all that downward momentum and a rally that stalled out and low volume, and it's starting to sell back off again. But I keep reading about, shortages of physical silver. I can't help but think that that's going to play into it. And if you do get a drop in here, what I'd be watching for is if you see a higher low, if you get this, pulling down, maybe, down to the moving average, down to 13 ballpark, watch for higher lows and maybe another leg up, because I think that there's going to be enough fundamental pressures on it that it could potentially outweigh the technical signal we see at the moment.
Is this one of the biggest divergences or splits between the futures price and silver eagle price? Silver eagles are like 20, 21, 22 bucks.
Oh yeah, they're selling them at a premium for sure. Like I've called around a couple of local coin shops, and I've seen them as high as like 23 bucks. Yeah.
Yeah. So like to buy physical right now, you're going to pay an excessive premium, even if you can find them. But the futures market here, Mark, the industrial price for future prices, if and when they need it, this isn't a good chart, Mark, in my estimation. What's your read on this metal right here?
The one thing, and I shared this week, and the one thing I kicked myself on is that during the sell-off, I was so focused on the technicals and the industrial side of silver that I didn't take advantage of some naked put opportunities on the precious metal side, right? I mean, when we look at silver, 2008, 2009, and post 2008, 2009, there is no doubt that silver can get beat up during an economic recession, right? An economic recession. But then it bounced, found its floor far earlier than the stock market did by months and months and months. And then you had rapid price appreciation. Like there's so many things you can do. Like the stock market's so confusing right now as far as what to do. I have my plan. I'm nibbling here and there, naked put style, looking for better opportunities, hopefully later. But the commodities market, there are some things in the commodities right now that I am just really, really interested in. And silver is one of them. Silver is one of them, down at depreciated price levels. Because you think about this, think about the industrial side. So let's say the bears are right and you're wrong on a silver bet. Well, you might lose some money. You can cost average down in the short term. But if you're wrong on the industrial side for silver, you are 10 times wrong on your bullish argument in the stock market, right? You're just wrong. If we have a recession, silver could go down, like we saw 2008, 2009. If we have a deep recession, it can go down deep, which means your stock bets on the bullish side, I don't like them at all. And yeah, silver. So silver still has some of that recessionary downside risk to it, but it also has that precious metal kick to it, right? That precious metal kick to it, which will rebound faster in a loose monetary environment compared to the stock market. And I just really interested in acquiring silver at certain levels when I get a signal to do so.
Yeah. Well, a couple interesting words you use there, Mark: nibble and cost average. And I think that's really important if you're looking to actually build in a low cost base. Like if you're actually, selling puts to get paid to acquire it, you're leaving yourself room to cost average in. So you're not putting all your eggs into the basket right away. You're starting out small. And if you're willing to cost average, I think you can speculate on quite a few things that have that kind of limited downside risk, but a lot of upside potential in these kind of market conditions. So I really like those are kind of the key words that popped out in your statements.
Yep.
I don't like the word nibble. Something about it. I just don't like it. It's like the word
you haven't
moist.
been attending the weekend classes.
Nibble.
Nibble has been the favorite. I don't know who, like, I get all of the phrases I use from the students in the classes. Somebody will say something clever and I'll be like, yep, I'm going with that. Yeah. Oh, it's been a favorite word the last couple of weeks in our weekend.
Hashtag nibbling in the chat here, Mark. Yeah, so it's definitely striking a chord with our team tackle out there. By the way, welcome back. Sorry about the programming error there. Our host, and if you missed it when he came back in here, he's at the hospital with his wife. She is having their first baby right now in labor, and so Cody couldn't be here today. David Kaiser actually came in, and he popped in and helped us relaunch this program again. Appreciate you, David, as always. And we are back. Many things I want to talk about. The dollar, not today. Bring up the US dollar chart real quick. Inside green candle might be forming a pivot. We'll do more analysis on it if it goes back above 100. Until then, I think it's far too early here. Noah, look at that inside candle.
Yeah. This is one of those, range is right in the middle of the last little swing range and a big support to resistance threshold. This is one of those, I'll get back to you and see which way it's going later.
It's got to pop that pivot from February, that little, pivot point around 100 even. If you get it back above there, I think you got a bullish signal. No question about it. Bitcoin is looking fine today, but it's still neutral in a range. There's nothing there I want to get into. I want to get into some individual companies, and I want to start with CVS, Cigna, or Humana, any one of them. Mark, when I popped in this morning, one of the things that grabbed my attention was the heat map. And Johnson & Johnson up 7%, United Health up 3%, BioMarin and the Eli Lilly and Cigna and these healthcare providers, they've had some positive news on different fronts, depending on the segment of healthcare. Healthcare is one of the more complex sectors, in my personal opinion, because biotech is very different than health insurance companies, okay? But the health insurance companies have said if you have any complications or problems with COVID-19, you're going to have no out-of-pocket fees. They're rallying here, Mark. You think that's just good short-term news?
You're going to have no out-of-pocket fees if you have health insurance, right? Which a lot of Americans are not going to have because they're not going to have their employer health insurance. I mean, have you seen the estimates on your average COVID-19 stay in the hospital?
I haven't. It's got to be.
It's nasty. If you don't have health insurance, it's another argument. I mean, it's just like, man, like, yeah, you can waive that little test fee all you want, right? Well, heck, I can buy how much are those tests from Abbott going to cost now?
I don't know what the cost was. They said it's only going to take 5 minutes to get a coronavirus result one way or the other, though, up to 30. But they think about a 5-minute test, kind of like a strep test at your house. I think they're affordable, you know, and that's big news for Abbott Labs. Bring up ABT if you can. Yeah, the $5 test, but if you get coronavirus and you don't have health insurance, you might be looking at a big bill, I guess is what you're saying here, Mark.
Yeah. Yeah, I mean, like there's a lot of things that this can play out. It all depends on the length of the recession, right? If there is one. I mean, how bad is the average consumer hurt? I mean, there's just a lot of uncertainties here.
Yeah.
But be sure to sterilize your Abbott package when you're buying corona tests for personal use, because you don't want to get the corona from the cardboard, right? Get a negative test, but then you picked up coronavirus from the package that was delivered from you. Wipe down those packages. Wipe them down.
Well, do we have any definitive scientific kind of evidence about how long they need to be before the coronavirus will die off of a cardboard surface? Do we? Because I've heard all kinds of estimates.
There's all kinds of estimates because right now we're still in the learning thing. But one of the things that makes this virus so nasty is its ability to live on surfaces for an extended period of time. It's so like the length of plastic versus cardboard versus a variety of other things. The coronavirus can just stay on surfaces for a long period of time. Now, we don't know the exact scientific. There's lots of people early stages of that and trying to figure it out. But the fact that it can, just for me, means just be extra cautious, right? Wipe that stuff down, wipe it down, wipe it down.
No, bring up Amazon, if you will, because I think it's important. Yeah, Abbott Labs came out and said, we have all these coronavirus tests. We're going to ship them around the country. We're going to sell them. They're going to be affordable. Testing is critical because it's one of the themes I believe the market needs. Clarity on the actual data, obviously. But then I read today, and by the way, Amazon breaks above 2,000. That's a tradable signal, in my opinion. Amazon actually has 17 warehouses that have been infected with COVID-19, and they're going to start testing their employees who work in a warehouse when they come into work. They're going to check their temperature mark, and if they have any kind of spike in temperature, they're going to send them home.
Well, here's the problem, right? We know from this virus the number of people that are asymptomatic that spread the virus. That's one of the big problems with the virus, right? Is that this virus is tricky. It's tricky. Symptomatic spread is an issue. So, and that's why you're starting to hear Amazon workers threaten to go on strike, right? You're starting to hear other delivery service demand hazard pay and safer conditions, because there's no way to taking your temperature is nice and it's cute. But what about, unless you're COVID-19 testing them with Abbott material that gives you the results in 5 minutes, you're going to do that for every shift, for every employee that they come in. Asymptomatic carriers are one of the big problems and why this virus spreads so much.
Noah, come on in here for a second. You're on mute. What is this chatter about ozone in the chat? I've not heard this. Is this?
Ozone is hyperoxygen, and oxygen destroys bacteria and viruses and things like that. It blows them up, literally. So ozone is, I've used it for medical treatments for years, and it's, very, very helpful. But you can also put your package in it, put it in a plastic bag type of thing, or you can just wipe it down with Lysol wipes if you got them, type of thing.
Well, yeah, what we've been doing is leaving them on the porch for 2 days. Then we wipe them down with Lysol, and then we unpack them. It seems OCD, but in a world like this, Mark, where there's so many unknowns, precaution I can take why not? What's the harm?
What is the downside of precaution? I mean, we're always doing probability assessments. I mean, I do probability assessments my whole life, whether it's poker, sports betting, or now stock. It's all probability assessment, right? And one of the base questions I always ask myself, what's the downside? If I sell a naked put at $3 on MGM, what's my downside? Well, it's $300 minus the put. I know the quantified risk, and so I can decide if that's a good gamble or not. What is the downside of being extra precautious?
One of the great joys in my life since I was a little kid, Noah, I always liked a good hailstorm. And we're getting hail here in South Jordan. Pretty interesting, about marble sized. It is littering the sidewalks and everything. The weather has been crazy. We've had earthquakes, we've had hail. My word,
Salt Lake.
Mark.
Oh, my good Mormon neighbors around me that live around me, they're preparing for Jesus to come, because it has been crazy times in Salt Lake. Viruses and earthquakes, and how many aftershocks have we had? Like 12?
Oh, plenty.
Oh, there's been like 98 aftershocks, but that have been registered. It's like 3 or 4 that have been really big.
Yeah, I mean, so we've had aftershocks and the earthquake, and we have all of these kids in Utah. We got moms and dads going crazy, having to homeschool their 84,000 children. We had the trumpet on Angel Moroni on the Mormon temple fall off during the earthquake, and we're dealing with COVID-19 as well. It's been interesting times here in Salt Lake City.
There's no doubt about it. And, we like interesting times, Mark. I don't like all the fear, but I'm trying to find the positivity. And listen, I'm in good spirits, honestly, guys.
No, absolutely.
I know being stuck and dealing with fear and the unknown. Well, God, isn't that life really? I mean, in the microcosm of it, trying to find the positive in all of this, there's no doubt about it. There's always opportunity. Here's the thing about markets and volatility. Volatility creates opportunity. A trader like Mark, you see a big crash come into naked puts, right? Day trader like Keith King, Mark, when the volatility picks up, he just goes in and day trades. Somebody who can play this volatility, if you got those skill sets, I think is important. The NBA, is there any chance they're doing the playoffs in June?
Dude, never say never, because whenever money's involved, never say never, right?
Bring up AT&T here, Noah, while we talk about this. They own TNT Networks, Warner Broadcasting. Mark, they're estimating between Disney on ESPN and ABC and AT&T, who owns TNT, they would lose $600 to $800 million in lost ad revenue.
Yeah.
Now,
no,
these are big companies, but I don't know. I'm trying to map it out in my head, because they even talked about maybe doing the games without fans. And I'm just like, that would be very interesting. Noah, would you want, we would all watch, right? We're all bored.
We don't have anything else to
do.
do.
If they did the game, and no, you're on mute again. But if they did pull the games and they put them back on there just for the playoffs, they said, whatever the standings were, we're going to the playoffs. We would all watch it, right? Do you think
for sure
do it this year?
I don't know if they're going to do it or not, but I did watch a WWE event with no fans in the stands, and I couldn't help but not turn the channel because it was, something different. But I'd watch for sure. It'd be one of those things where you'd miss the opportunity to go to the games, but that's okay. I think people watch, and I think that would make ESPN very, very happy, because I've been watching them. What do they, how many 30 for 30s do they have that they can replay?
They've got to be starving for content. Steven has a good point. I would watch an eating contest at this point.
I will put on an eating contest for you, Steve. We're going to have a hot dog eating contest here.
We could do it on Zoom. Yeah. Oh, no. We are not going there. Obviously.
No, let's do it. No, I actually don't think this is a terrible idea.
An eating contest on Zoom?
Like we should have Noah and I, or we should have an eating contest,
I could do like a pie eating contest. One pie. I don't need like 50 hot dogs though. Those guys
how fast you could eat a pie?
One pie. Yep. And I'll just go slow, guys.
We talking pizza pie?
I don't know. AT&T and Disney. I keep wondering about these companies. AT&T, obviously, they pay the dividend. Bring up Disney, though, here, Noah. It's not just ESPN. Disney has problems across the board. Their movies, their launches. Mark, we've talked about this company. And, I saw the headline here thinking about ESPN. This is a really complex one to approach right now, don't you think? Because how do you map out where the bottom is on Disney when we don't know when these shutdowns will end?
What's up? Halftime report.
Hey, Gino.
What's up, Gino? No, I mean, seriously, some companies are easier or harder than others. Disney is probably one of the harder companies to map out what a fair price that you're willing to pay is, because how front and center they are on all of their revenue fronts.
Mm-hmm.
So it's a tough one, right? I mean, if you knew everything was good tomorrow, you would really want some Disney right now, right?
100%, yeah.
And so that's what makes Disney particularly tough, because if you knew everything was good tomorrow, Disney would be like, oh my gosh, go get me some Disney. But we don't know that, right? And so the longer it goes, the more impacted Disney is, the less attractive their financials might look. So Disney's a tough one right now.
That's what it's all about, Mark, is if you knew what it was about, which is the backbone of the market, fundamentals. How much did Disney pull back off its high?
We're from 150 to 80. So you almost had a 45% correction there.
Okay, so think about this. 45% correction, but the fundamentals have only dropped. Next year's fundamentals, 17%. So did it overreact? Yeah, right? 17% cut in fundamentals looking forward, but we don't know where that fundamentals are going to stop dropping.
I think that kind of analysis, I'll challenge you on that a little bit here, Gino, because that analysis is based on the idea of tip to tip, right? But Disney was at $100 last year. We're at 97 right now.
Right.
So when you think about it like that, sure. But how much of this was this huge year in 2019 put the market at such a high point? We were at an all-time high on so many of these companies. If you really look at the big picture, Disney at 97, guys, that's the average price for 5 years on Disney. It's not that low. I mean, yeah, it did take 45% from the top, Gino, but is it really that deep of a discount if they can't get people to go to a movie theater or go to the park?
Right. That's the thing, is where is it going to end? We don't have an outlook. We don't have.
Yeah.
Because, they're normally at an 18 PE. Looking forward, they're at a 22. It doesn't look good yet. We need that forward PE to get lower than 18. And we're not going to get that until fundamentals slow down.
And we have no idea what those bottom line and top line numbers are going to look like.
Yeah, because they keep every single day. I'm watching the Dow 30 fundamentals. They keep downgrading it a couple pennies until they get some clearance. There's only a couple that have it, and that was Merck and Johnson and Johnson, Pfizer, and United Health. Actually didn't lower it in the last few days, the guidance. Everybody else has lowered it. So it's kind of like, example I give on the fundamentals is the real estate market. You guys all remember the crash in the real estate market. One of the things that saved the real estate market was investors. And what I mean by that is the houses in my neighborhood went from like 700,000 down to 400,000. All of a sudden, people started buying. We're like, what made you guys want to buy all of a sudden? What made you pick a bottom on real estate? And what it was is a simple formula. Where can I actually rent out a house and be cash positive? So the investors are like, I need to be able to buy that house for 400,000 so I could rent it out for X amount to make money. And when you start thinking, oh, so the investors, people with money, are the ones that put in the bottom. People that actually want to take the risk on an investment. And that's like this. Where's the bottom on fundamentals? Where's the investor? The Buffett's going to step in. When he stepped in on Bank of America, that put a bottom in Bank of America. So it's like
there's a point, and it's like what naked put you sell at what level. There is very much a qualitative aspect to this market. And for me, like, once again, I'm fundamentals right now is all guesswork, right? Totally
right now.
And so for me,
companies we could look at, quite frankly, Zoom, Slack, Google was upgraded today. The markets are really fascinating, but let's just kind of wrap this whole session up. It's been really enjoyable. Sorry for the disruptions on YouTube here today, guys. We actually don't know what the issue is. I mean, Noah, what do you think it might be? Could it be a YouTube problem?
Oh, I'm going with it's my magnetic personality interfering with the electronics. That's usually my first suspicion. But then after that, I'm guessing you got a lot of people using the old internet right now. So maybe it's a bandwidth issue on Zoom or on YouTube.
What would society do if the internet broke down, Mark?
Oh, riot. And I was going to loot you something real nice if that happened.
That's a big
listen, I got enough to worry about without, speculating what would it do if the internet broke down.
I actually do think they're worried about the grid a little bit. They've slowed everything down for many different reasons and all that kind of stuff. People are at home. Microsoft, bring that chart up real quick here. They reported a 750% surge in demand for their cloud storage because companies got to have their documents, There's going to be winners out of all this thing, Mark, even as consumer behavior changes and all that kind of stuff. But let's just finish final thoughts here on the market. Give me the S&P on an intraday chart. We're stalling. Gino, by the way, as always, welcome. It's great to have you coming in and joining us. What's your read on this whole situation, Gino?
The situation for the whole market as a whole.
Big picture. We're starting the week here up. Yeah.
the whole world that watches the market is like, yeah, it is an overreaction. Where do we buy? But it's not an overreaction because we have no outlook. All I hear is guesswork from politicians to professional traders to investment managers to money managers. I talk to a lot of big money people. I got off the phone this weekend with a big oil guy. He watches the reserves. He lives in Oklahoma. And guess what? He was guessing. And I'm like, really? He usually has precise numbers for me. He was like, I don't know. When I heard him say, I don't know, it's a guess. And so I hear two-way talk, bull and bear case. Uncertainty sums it all up. Investors and traders do not like uncertainty. So what do? You look for trends. And right now I'm seeing fundamentals downtrending with no outlook. The stock market still in a long-term downtrend with no outlook. A lot of people talking in fear, a lot of guesswork. And again, where do you put, like Mark said something great, where do you put the price on Disney? Where do you put? And are you comfortable with that risk? That's what it comes down to. Are you thinking like an investor or a trader? If you're a trader, go with the trend. If you're an investor, you better do some value thinking and thinking about it and cost averaging. Two totally different mindsets. But right now, I woke up late this morning because I was up last night playing the futures. Now I remember why I hate day trading and futures, and is a Sunday. I hate work on Sunday night, staying up late. You get hooked, and next thing you know, it's 1 a.m. and you're watching the futures market. You're watching oil. You're watching gold. It's addictive. You're kind of like, why do they just close? Wait until Monday. And it's exciting if you know what you're doing. It's dangerous if you don't have education, period. So think about that, practice. And this is a very volatile market and a lot more to go. One more thing I want to throw in there, really interesting. I live by LAX, a few miles away. We used to count the airplanes. It's about 1 every 3 minutes. That's how far apart they land. Right now, it's 1 to 2 every half an hour. Isn't that crazy?
Well, what did I read for every
1% drop in traveling year over year? 91% versus last year.
Have you gone on the freeway out there, Gino? Taking the old LA drive?
That's a great thing is I could get to my in-laws, which are 40 miles away, in about 35 minutes. We are going 80 to 85 on the highway. There's nobody on. It's unbelievable. I mean, you remember California.
Oh, yeah.
The 405. The 405 is, they call it Carmageddon. It really is just a mess out there. It's a parking lot. It's amazing. It's like, wow, I don't have to hit the brakes. And you get to places quickly. The air quality is much better. We're already noticing that. The airport is just so quiet in that area. There was no line at In-N-Out by the airport. It was like, the closest In-N-Out there. You guys have all been there. Noah and I even walked over there one time, I believe. And it's like, wow, it's just amazing. It's like everybody's hunkering down. It's scary in a way, but there's a lot of positive from it, One more little rant. Why is our gas still over $3 a gallon when the national average is 2?
Well, and the spot price on the futures market's like 65 cents or something like that. California taxes, Gino. You got to pay for all those social programs out there. You know it, my friend.
Oh, I know. It's horrible.
Yeah, it is what it is. And all those roads and bridges and schools and everything else you got going on. Noah, you had a thought there. I didn't mean to cut you off there.
Oh, I was just saying for every $1 of air travel, it generates another 70 cents in destination, spending. So, if you're seeing a slowdown in air travel and traffic and tourism and all those things, travel, business travel, et cetera, you're also seeing a slowdown in overall economic spend across the board. And what is it? Makes up 10% of our GDP is one of the numbers I saw. So it's a big part of that. So, there's obviously going to be some economic shifts, and just until we have the data, it's all speculation.
Yeah. Mark, final thoughts there, young man. Bring us out if you can.
Just keep, once again, like everything Gino and Noah said there, I agree from an investing perspective. Keep yourself busy during this time. Find a project to do. Maybe build a watch list. I know one of the things I'm working on for pro members is building this really massive watch list, categorized, so we can look at different opportunities that arise. Work on your yard. Do things that can keep yourself mentally active. Like, hey, don't get me wrong, I'm binging Netflix with the best of them in between stuff, right? But like, keep yourself mentally active. Get your sleep, keep your brain active, And you will find that this time period in our life, not only will you be more productive, but you'll be happier too if you keep that brain active and productive along the way.
Yeah. Yeah, same advice for me as always, guys. Just find and build an investment thesis and go out there and execute it. Mark, you did a great job over the weekend. And by the way, if you're a pro member and you caught bits and pieces of the part 3 series of our halftime report today, I don't think we've ever had that before. This is a first, Mark, where we had to go live 3 times. But if you want to go back and review some content, I would strongly recommend go and checking out the options report I did over the weekend. Noah did a great stock report, but those live webinars, Mark, I do believe those were recorded and we are posting them on site today. Correct?
Correct.
Yep. All right, guys, if you're not a pro member yet, 15-day trial in the links in the link below. It's our standard offer. And on Mondays, we're going to be doing our podcast. So the Trading Justice podcast, look for a new episode coming out later tonight. Before we have to go part 4, let's just take this one out for today. We're done. We'll see you guys tomorrow.
Take care, everyone.